Well, yesterday there was a lot of it. I think it's impossible, given the instability of how we get information and narrative changes in headlines, to look at a day like yesterday as something akin to what we saw last April 9th.
Yep.
I think there's still a lot of unanswered questions, even just, your reporting on Trump's comment about the ceasefire being contingent upon the Strait of Hormuz opening, yet yesterday it was, we might end this thing even if the Strait doesn't open. So here we go again.
Yeah, exactly. Kevin, given those crosswinds out there when you're talking to your clients, what's the message? Is it to look past all this craziness and focus on the fundamentals? What's the conversation?
Yeah, I mean,
there?
especially with any conflict like this, you never want to make a knee-jerk reaction. I mean, we've adjusted how we think about markets and the economy responding to this as it's continued to drag on. Clearly, we've dialed back expectations for what growth is supposed to look like. But I often think, in terms of an investor's reaction, I can't help but think about the Jack Bogle quote, "Don't just do something, stand there." And I think in this moment, it kind of feels apt because you can't have a high conviction view on any particular asset class, I think, right now. You can have some conviction maybe on something like commodities. That's somewhat obvious. But I think for the equity market, to Lizanne's point about how we get information these days, I mean, that gap between Washington and markets is narrowing every single day in terms of policymaking's impact on day-to-day equity moves. So I think that needs to be taken into consideration.
I mean, let me do this, Paul. Kevin Gordon out with an incredible chart. Liz Ann Sonders hasn't seen it. So let's cover it right now.
Well, Liz Ann Sonders didn't create it. That's for sure.
The Standard & Poor 500's forward 12-month PE was a lofty 23.1. And it's come in, I'm going to go Stan Fisher on you here. It's coming, I'm popping 15 or 20% from 23.1 into 19.6 as well. Does that scream opportunity for you, a sub 20 S&P multiple?
This has been pure multiple contraction in this corrective phase because earnings estimates have continued to go higher. I think the answer to that will be better defined once we actually start earnings season. We know why energy sector estimates have gone up. Tech sector estimates have gone up with a concentration in just a couple of names. The analysts really haven't done much adjusting to estimates for a calendar year, maybe because they're waiting, for as much time as possible to get up to the eve of reporting season and or wait till they get commentary from companies.
Kevin, we had a rotation, I think, kind of late last year, coming into prior to the war, maybe coming out of some of the high growth, high multiple stuff that have been the drivers of this market, to maybe into some more cyclical stuff, small and mid caps. Was that just a short-term trading thing, or is that something longer, do you guys think?
Yeah, what's been interesting is that even on a day like yesterday, when you had tech having its best day, the tech sector having its best day since 2025, that was, to me, in response to what had become the momentum trade in favor of energy, not in favor of tech. What was interesting, though, is even with that significant bounce, you didn't really see any material pickup in flows, particularly in the retail cohort, into that sector. I think that response mechanism or lack thereof is pretty important because even in advance of the war, there was a lot of de-risking in that particular sector for that cohort where they were starting to put money to work in, outside of that and having a little bit higher conviction in areas of, whether it was industrials, whether it was, parts of consumer, discretionary and staples, or whether it was even financials. So I think that dynamic, the fact that hasn't really shifted, it does tell me that there's still probably more to that, broadening out trade, if you want to think about it that way. But I just think it's been a little bit more delayed, not necessarily derailed, but we're sort of in the camp that it can happen. It's just, of course, now at the mercy of these headlines every day. It's probably not going to happen as fast as we had thought.
Liz Ann Sonders, Kevin Gordon with us with Charles Schwab together. We just love doing this. Huge response last time. Thank you for listening across Liz Ann Sonders Nation. Okay, I want to talk process here. Do you guys on something as basic as the adjustment of fear of missing out? Is he allowed to disagree with you? I mean,
sure,
is it
he's allowed to disagree with me.
Are you doing Steve Roach 1-on-1 where you fight like cats and dogs?
7 years ago when I hired this guy, I think not that I ever put fear in anybody, but I think it was a natural thing for you. Yep, I agree. Now he can say whatever he wants, but we're pretty consistently aligned.
Where are you on fear of missing out right now, gauging it after the shock of this war?
I think the retail trader did slightly shift their tack throughout the course of this war. They became a little bit less enthusiastic at the individual stock level with the sort of the buy the dip and chasing performance on the upside. So I think there's been a little bit of a little less complacency being expressed in some of the moves by the retail trader. I really, though, think what's going on here is, given the inability to gauge what the next headline is going to be, what the next narrative shift is going to be, what we can glean and understand is positioning, where I think there's so much short-term money in the market, whether it is the retail trader or systematic hedge funds or the CTA world. And there's a lot of focus on, all right, what are the crowded trades? What are the desolate trades? Mm-hmm. And either playing a momentum there or looking for the potential inflection point where you see a shift. So if you can understand the positioning, even though you can't anticipate the headlines, it helps you stay in gear.
I mean, I guess what I've learned over the last, 10, 15 years, a little bit more, is that your retail investors, they're pretty good. I mean, they buy the dips. They're pretty good.
Because of Lizanne.
I mean, I haven't felt any, panic selling. Are you guys,
retail used to be called the dumb money.
Exactly.
No,
when I was allocating IPOs, I'd be like,
I always used to say, not our investors.
Yeah. Yes.
They're
We're
the smart money.
Lizanne and I are sort of on this campaign to get rid of that moniker, the dumb money, because it really isn't. And it hasn't been. And I think, to your point, Paul, about this cohort of investors, particularly post-pandemic. I mean, you talk about the past 10 to 15 years. Yes, the retail share has gone up. It's sort of the only class of investors that has gone up by as much as it has, almost doubling in percentage, in terms of the volume of the market. But if you look particularly the past 5 to 6 years, there hasn't really been, number one, what I would think of as a real bear market, certainly not one associated with a recession. And I think that has sort of conditioned investors, and particularly this new cohort, who, especially for those who are younger, in the, whether it's Gen Z or young millennial, I think it has kind of conditioned them to think that this will sort of always work as a strategy. But also having a longer time horizon, that's not always associated with having a high risk tolerance.
So when you guys have your events, and you guys go all over the country, is there people like me walking in the door, or are there younger people walking? Because it seems like my kids have it all on their phone. They're engaged.
Yeah, depends on where we are. But I mean,
if they're in a bar in Brooklyn.
You know what we find in client events a lot, the bigger ones, are multi-generations.
Yes.
So it'll be, a retired couple that in some cases they're there with a child and maybe even a grandchild.
Mm-hmm. Yeah.
Interesting. It's the whole age mix. When you have $12 trillion in assets, you have a little bit of everything age-wise.
Liz Ann Sonders, Kevin Gordon with us. We continue. Our futures up 27. The VIX slides from the angst 31 level, where Kevin said go to cash, from 31 down to 25.19. Here, we are 50 minutes away from a scheduled President Trump at the Supreme Court. I just saw it on Fox. Trey Gowdy had a substantial number of people below the steps of the Supreme Court in Washington. We'll give you video of that on YouTube as we can here. Don't see that quite right now. So I've got another quote here. This is from Kevin Gordon's research, I believe. Factor focus, high interest coverage, strong balance sheet, positive earnings revision trends, and stable improving profit margins. Kevin, is that Mag 7?
Not all of them, but I think that over the long term, that has proven to be, number one, that's been where the stability has been and consistency of returns post-pandemic. We really have been in a more sort of factor-dominated world because it's just harder to make these monolithic sector calls. It's getting harder. It's not impossible, but it's getting harder because of the concentration in a lot of these areas. I mean, communication services is such a standout for that because it's essentially two names that are sometimes close to 80% of that sector. But no, we still believe in that up in quality sort of story. And I would say actually that's moved I think what's been one of the more beneficial elements of this market year to date is that's moved down the cap spectrum a little bit. So the percentage of unprofitable companies, even in an index like the Russell 2000, that has rolled over year to date. It's still relatively high. But I think that there's been a benefit now spread throughout the market, not necessarily just in your classic S&P 500.
Liz Ann, you and I started in the business kind of around the same time. One of the things that's really changed, I think, is the whole alternative investment opportunities for everybody, including retail investors.
Yes.
How do you guys at Schwab position alternative investments, whether it's hedge funds, private equity, private credit, real estate, all that kind of stuff? How do you guys position that?
And we have been big democratizers over the past 50 plus years, and I think we're part of that process now in helping to bring alternative asset classes into the asset allocation discussion. The most important thing is education around it, and also fit. Making sure that clients who are bringing, whether it's private credit or private equity or hedge funds, that they understand how it fits and what is hopefully a well-planned strategic asset allocation portfolio. Where are the correlations? What is the willingness to give up some of that transparency, to give up some of that liquidity? Don't just think of it as the shiny new object. I need to get some of this. It's the education that sits behind it. And most of the investors that we talk to who want to add that into the mix are those that take what we call an advised approach, where they're working with one of our advisors, one of our financial consultants, in developing a long-term actual plan.
I have to ask this to close out. Lizanne, you did a real public service for the nation. I've brought this up before on our fiscal policy. You must be getting questions on our debt and deficit.
Every single solitary day.
Is it any different from the time of Pete Peterson, Paul Tsongas, and the senator from Georgia? Is it the same old, same old?
The questions are a little bit more, they have a little bit more of a calamitous tone to them. Oftentimes when we get questions, it's not just, what do you think of the high and rising burden of debt, or how long are we going to run deficits this big? It's, what is the tipping point? And then it's often got a follow on, like, is the dollar going to lose its reserve currency status? Is the U.S. going to default? Is China going to literally or figuratively wake up one day and just decide to dump all of its treasuries? So there's a little bit more of that, boy, I feel like we're at a tipping point tone to the questions.
Can we move on from the NCAA tournament?
Please.
Kevin, explain Pepperdine playing UCLA back-to-back in Stanford in volleyball. It's like religion out there.
They're players.
Yeah. It's my favorite sport in school to follow.
Is anyone under 6'5"?
No. Only me, but I wasn't on the team.
Are they recruiting you, Kevin?
Is it like a conduit from Punahou in Hawaii? And you just go to Punahou and say, we want the 6 dumbest kids, let's go?
Not dumbest, tallest. But no, it's an amazing. They're killing it. I love following that sport. It was beach volleyball was my favorite to follow.
Oh, they had beach volleyball as well.
Oh, yes,
Our women's beach volleyball
he went
team
to college
is incredible.
where there was beaches.
Did they have beach volleyball in Delaware?
We had an area called the beach. It was like the quad, and it didn't even have grass though. So yeah, it kind of looked like
the
sand
water was
at
a little
times.
different though.
Yeah,
I think the water in Malibu is a little bit better.
Oh, help me! You know this better than me. We've done way too much West Coast today. We had Harvey Mudd.
I know.
Claremont
There's awesome
Economics
schools
in
out
your
there.
There's
day.
never too much West Coast.
Santa Clara Broncos, baby. There we go.
Beach volleyball.
Pepperdine has just consistently across the board over the years. That's been one of, if not our best sports. I mean, in our tournament rankings, and that's amazing.
So
that and
the
water
school's
polo.
really in Malibu?
Yes, Malibu, California.
Let me explain April's.
You got to look up a picture of it. It's
I know.
crazy.
Let me translate this for you, and this involves Jenny Cremel. April 2nd, Pepperdine's playing UCLA in volleyball. April 2nd in Western New York, you get up and you've got a biochemistry class at 8 a.m. and you have to walk what's called the quarter mile west into the wind coming in from Buffalo.
Not to mention in Malibu, though, you've got to wake up and climb 100 stairs because we call it Stepperdine. There's a ton of stairs, so it's tough. It's tough.
Violins playing just for you over here.
I'll bring out my violin.
Your volleyball update today.
Yes.
We do it all here.
We do it all.
Kevin Gordon, thank you so much for bringing Ann Sonders with you. You're both wearing black. Kathy Jones retiring. Extraordinary career.
Amazing. We will miss her a lot, as
Did you
will
see her
our
tweet
industry.
Legend.
I did not.
She did a taco tweet on President Trump.
Okay.
It was totally outside compliance.
See that?
It was miles.
And so it begins.
I'll put the compliance plug. She did mention yesterday on Twitter that this is now her personal account.
So
Today was very personal.
Yes.
We await that from Kevin Gordon as well.